Boom, and we are live. Macro Monday. All things markets. How you guys doing today?
Pretty good. Pretty good, man.
Isaac, you looking like a rock star today, man.
Well, it's probably because I've showered.
Okay, bro, you look like you should be the lead singer of a band, bro.
You do look like your arm is full of tattoos as well.
Oh yeah, I'll leave it a mystery then. I won't reveal my arm.
Yeah, Isaac said something super funny, bro. So when we were waiting on you, I was like, man, JT on CP time today, and I was like, Isaac, you know what that is? He was like Central Pacific.
Yeah, most Central Pacific time. Yeah, yeah, yeah. I like that. I like that.
Oh man, for those of you guys who don't know, that is colored people time, aka black people time.
That's racist. But no.
Yeah, you started laughing like a ton, and I had no idea why. I was like, is it really that funny that I said Central Pacific? I was like, I better keep that one in mind. If it's like it's a real crowd pleaser here.
Yeah, bro, that I'm gonna tell that to a few people. If you come to my wedding, I'll probably have to tell that story, bro. Is that funny for the culture? All right. Yeah, I was in Florida over the weekend, so I
How was that, man?
it was pretty good, man. My
That
dad and his
playlist
friends.
came in handy, huh? Or
Oh, bro,
that
I
that
was
little
playing
album?
that. I played that song like 5 times a day, bro. It's a pretty good song.
Let's go. Let's go. I like that.
Yeah, that song will always remind me of that trip now. Yeah, pretty good time. My dad and his friends, it was like 26 of us, went to a Tampa Bay Bucks game. We had some good seats, and they were just roasting each other the whole time, bro. Like my dad, bro, he was always playing pranks as a kid. One of his friends told me that they so his friend Kenny, they knew each other since like kindergarten. So he was driving the Brinks truck, and my daddy was gonna put together a prank to act like he was gonna rob him when he was delivering to a bank.
Man, that's hilarious, man. I wonder how old boy would have reacted.
Man, I don't know. He was gonna get
What
like
was he
one.
gonna do? Like fake guns or something?
Yeah, he said he had made some wooden guns. I'm just like, oh my god.
That's hilarious, bro.
Yeah,
That would have been funny. That's an elaborate prank.
yeah, he'd be taking it too far, but yeah, man. All in all, it was a good time. They was roasting each other the whole weekend, bro. It was crazy. It reminded me of me, you, and Cordell back in Connor Creek.
That's fine. Yeah, no, that's good, man. I think it's super beneficial to your health, especially as a man, to have camaraderie like that, especially later in life, 100%. So that's what's up, man.
Yeah. I saw a quote one day, and then we can hop into it after this. It was saying like, or not a quote. Somebody was saying like, guys to like ease tension, they'll like talk shit about each other and roast each other,
Hmm.
and girls, they'll compliment each other and be like, "Oh my god, you're so pretty," even if they're not. I'm just like, huh, that's super true, actually. That's super true. Because I'd have seen tense situations where a girl get a compliment from another girl, and I'm just like, that's stupid. But cool, man. So let's get into it, man. I'm gonna bust these charts open here, share my screen, and then we can talk about what we're looking at, any moves we made, any bills we paid. No, I'm just joking. Okay, so starting from the top, that balance sheet is just coming on down. It's looking good. It's about to touch the 200-day, which isn't as like much of a factor on this kind of chart, I don't think. I just have it on all my charts, but this is a really good sign. The Fed's offloading junk bonds from that balance sheet. And then we have gold here consolidating. It looks like it's turning previous all-time highs into support, damn near support, resistance. We'll see. I haven't looked at these charts all weekend pretty much. So we have the S&P. It finally hit the 200-day moving average again, and it looks like it's testing as resistance. If this holds, shit, we'll probably go higher, guys. No telling. But we want to see this act as resistance, kind of like how it was here. When it's on the bottom of this, it's usually bearish. When it's on the top, like as you can see here, it's usually bullish. This was COVID when we had the big drop, and you see what happened there. And then the Dow, same thing. All the charts pretty much looking like twins. And then Apple still is teetering on all-time high levels. And last week when we were on, it looked like it was kind of breaking down, but we've been pumping for like the past 3 weeks. We've had green candles. So yeah, man, we'll see what happens. Let's go into some crypto charts. We got Bitcoin still consolidating here. I want to talk about something here. Let me hide this. People have been saying we have been in a bull market since like pretty much this whole year, right? Let me go to the exact candle. Right, right here is pretty much January, and you can kind of say that technically, but from March to right now, we're at the same exact price since March. So like if you look at it from a yearly perspective, you might be able to justify it. But if you just look at it from here over, like this isn't giving me bull market vibes. Like this is a consolidating market. It's been consolidating literally since we had this big green candle back in March. And then when you look at ETH, despite EIP 1559 and billions of dollars of ETH being burned on each transaction, ETH has been in this bullish pattern since June of last year. Like this is a bullish pattern. Like when price gets to the end of this chart or to the end of this triangle, it has to make a decision. And as it's been in there for over a year, damn near a year and a half, it finally just broke out to the downside, which is and it looks like it's coming back up to test it as resistance, which could signal that we have like ETH could have a ways down to go. Like you see this right here, came down, now it's coming up and touching it. And then on top of that, it's also retesting the 62 EMA, which is pretty much rolling Fibonacci, as well as it's way under the 200 day. And as you can see, when ETH is above the 200 day, it's usually pretty bullish. When it's under it, it's pretty bearish. The 200 day is like almost like a standard indicator that a lot of traders and investors use on their charts. And then going back to the weekly here, if we just look at the total crypto market, same thing pretty much as Bitcoin. It's just been consolidating since about March. And we have this BlackRock ETF on the horizon. And while it would cause a lot of buying from BlackRock, I think it's also going to cause a lot of selling too. Like you have the Mount Gox unlock and people who are just getting access to their Bitcoin after not having access since what, like 2013 or whenever that went down. So I believe some people are going to take some profits on any kind of bullishness that could happen. It's kind of like the whole buy the rumor, sell the news kind of thing. So it's just like, I don't, again, I just feel like I sound like a broken record. I don't really see the demand. I should have brought up the MicroStrategy chart, but I don't see the demand. And then like going back to the halving, I want to talk about that a little further too. What I will say is the halving will never be bearish for the price of Bitcoin because whenever you're cutting the supply, all demand has to do is stay the same. But I don't think it's going to be as bullish as it has been for the past, all of them. One, because of the current economic climate that we're in. And, I do believe we got a recession like right on the horizon. And two, it's going from 6 point whatever Bitcoin down to 3 isn't as big as going from 12 down to 6. So, yeah, we'll just kind of keep playing it by ear. But like I was saying last week, this is like the perfect time to be yield farming, which is providing liquidity on decentralized exchanges. So had you from March till now, you could have provided liquidity from let's say 25K up till 29K. Like you don't always have to hit the tops and bottoms. And you could be making a yield that not only in places outpaces inflation, but you can just be stacking your BTC, which will allow you to always be doing something in the market. And like I said last week, not just doing something for the sake of doing it. So, and I know you might be thinking like, well, it's Bitcoin. You can't use Bitcoin in DeFi. You have wrap Bitcoin on pretty much all chains, Arbitrum, Optimism, even ETH. So you can use wrap Bitcoin and provide liquidity on like Uniswap V3 or Trader Joe. I believe they have it there as well. And you can just be making passive income while we're in this crabby market so that when markets do return green, you have more to sell, which translates to you making more money. What are you guys looking at? What's your guys' thoughts on the markets right now? Any changes to the portfolio? Any changes in views?
I was kind of thinking about this. I think it was yesterday, but with Bitcoin and crypto in general, it's kind of seems like we've hit a critical mass in consumer adoption, meaning like unless something else happened, i.e., BlackRock's ETF, that is the only catalyst for demand that's going to help this out. Just because the narrative around Bitcoin when it comes to retail consumers, I mean, it's just not safe. And so they've seen pretty much all year only negativity. The days are long gone in which we hear guys making $2 million off of Bitcoin appreciation and then going to buy a tree house in Alaska to survive out of, because he wants to live that nomadic lifestyle. There's kind of a ton of those guys a few years ago. You don't hear about them anymore. And I frankly just don't even hear any good news out of like I don't hear any good news out of the space. I hear interesting projects, because we follow the space and whatnot. But if I was a retail consumer, in my mind, I haven't heard anything good. And as a retail consumer, that's the role I'm in right now. I go off of what other people say. I barely do my own research, right? And so if I'm just Auntie Sally, but I like Bitcoin overall, I'm monitoring what other people are saying because I don't know how to do proper research. And so, yeah, I'm basically following the narrative and I'm just not going to buy any Bitcoin right now. So I think we've reached that critical mass for some reason. And literally the next catalyst would be that spot ETF. We saw the futures ETF, even with Ethereum, it just doesn't have demand. Bitcoin futures, it's not going to have as much demand as well. And so, yeah, I just think, based on the narrative, there is no other catalyst other than bringing institutional capital that would get the price moving back to the upside in a steep manner.
Yeah, I agree. It's like one of my favorite quotes from Warren Buffett is in the short term, the market's a voting machine. In the long term, it's a weighing machine. And what that
And what
means
that means
is
is
sometimes it
sometimes
takes
it
a
takes a
while for
while for
fundamental
fundamental
quality
quality
to
to
be shown in the price. So what JT is saying is that, and slash what he didn't say is there is a lot of building happening in crypto. You got ZKPs, like layer ones transition into layer two, like all these layer twos like helping Ethereum scale so that when the next bull market comes around, fees are cheap. The UX is going to be better on a lot of different applications. Like it's a lot of building happening under the scenes, a lot of seeds being watered that just haven't sprouted above ground. However, there isn't anything making people to come to the farm to see the trees. And that's where like right now people are voting, but they're voting low. But there isn't anything happening to like bring people to the space to get people excited because like if you think about it, like everything that's happened in crypto so far with Bitcoin, DeFi summer, NFTs, it was all narratives, things that got people excited, and there wasn't as many fundamental advancements as there are right now, but prices are extremely, extremely low. So that's what he means when he says like, other than like the BlackRock ETF, there isn't like yeah, people are building things, but there isn't any like other than like Radix launching their layer one, which I've talked about a lot. There isn't really a lot of new innovative things happening just yet. You know what I mean? Like the last thing that we really saw that was like truly innovative that got people really excited in DeFi was like GMX. Hear Arthur Hayes talking about it, buying a lot of it, et
I
cetera,
love
et cetera. But
GMX.
yeah, we need a narrative.
I was just saying I loved GMX. I used GMX all the time back when it was blowing up. And I mean, like, I'll let you finish what you were saying before
No, that was
I
pretty much
jump
it.
off of that. Well, I'll say a few things. I'm gonna concur with the general consensus here that yet nobody is interested in crypto who are not already bought into crypto. And in order to change that, you need like massive institutional buy-in to signal to retail consumers that this is safe. And I don't think we really understand the magnitude of the loss that has occurred in the crypto space after FTX and after Luna and after all these just absolutely massive pandemonious collapses, especially FTX. You have an entire generation of retail consumers who lost money in crypto. Like, and not even a small amount, like a large amount of money in crypto
Life
due to
savings
just
a lot of
Yeah,
times.
even
life
with all the
savings.
NFT debacles as well, idiosyncratic. I
Yeah,
mean, it has been a ton of losses. You're right. Yeah.
it's been insane. And so you have an industry right now that is riddled with just huge losses and lawsuits and these issues. Like, and there's people who've been scammed. They're never going to go back to crypto. They're just done with it. And it reminds me a lot, honestly, of after it was Black Thursday in 1929. You have, for the first time in America and in the world, stocks, and you have, like, leveraged banking. You have people trading on commodities, and they're like, "Oh, this is new. This is crazy. I'm making money from this," and then they lose everything in 1929 when the banks collapse. And you'll have your grandma, I'm sure a lot of you guys can relate to this, who still puts her money in physical objects like jewelry and gold and then hides it in places and doesn't trust banks. Maybe it's great grandma for us now. She never trusted banks ever again because she knew that they fucked her back in 1929 when she was young. They fucked her and they fucked her family. And there's a lot of people who have been thoroughly fucked by crypto who are never going to go back. So I think that, like, in order for us to fully comprehend how hard it's going to be to get back to the heights that we previously had, it's gonna take a lot, and it's going to only be through institutions. It's going to take a lot of institutional buy-in, and even then, I'm not expecting us to get back to our previous heights for maybe years from now.
JT, you and I were talking about this on one of our book reviews. After the Great Depression happened, three important things arose that, well, two of which are still relevant. The other one kind of got reverted. The Glass-Steagall Act, which separated commercial banks from investment banks. The Securities and Exchange Commission, because people got fucked so bad that, just like right now, people are calling for crypto regulation. There needs to be, like, there isn't going to be like a new SEC, but maybe like a branch within, because these laws don't apply to crypto in the same way, because although they're securities, they're just different. And then you had 401ks that were invented because people weren't getting back into the stock market. Like Isaac said, people were buying gold and tangible investments and hiding them and keeping them out of the system. So I don't know how they can, like, recreate that, some similar products like that will give people like safety and be like, all right, this is like if you look at it, these are things that ensure that if something happens, you're covered. It's like the SEC makes it so that there's a safety net so that there isn't as many scams. And then 401ks make it so that, hey, if I'm making money from my job and I invest into a 401k, the company's going to match me. So it's more incentive for you to want to get into the market because it's almost like you're getting free money on top of that. With the current recession that we're in, and even the top companies beginning to like lay off people, I doubt that they're going to want to like start doing something like that. And they don't really care about crypto as much. So we need an overhaul, like big time, to get people not just feeling safe about entering into the market, but excited as well. And those are two different things. And again, just to piggyback on what Isaac said, the grandma who is not investing because she got screwed so long ago. Human beings have a tendency to remember a negative event more than a positive event. And the fear of losing something is stronger than the desire to gain something. It's like the brain is like, when something so tragic happens, it's going to remind you, any data that happened from that time point is going to be etched in your brain and remind you anything to do with that so that you don't have to go through anything like that. And that's grandma right there. Like, she's probably still telling stories to her nephews and to her grandkids to not buy certain things, who knows, because of how she got screwed before, even though you have those three things that came after. So yeah, we need a big overhaul.
Yeah, I think a lot has to do with it as well. It's just confusion. And so, like, right now, it's like an interesting mix because right now is like where you're seeing like peak interest in markets from retail investors and regular folks. And, when things start to get crazy, of course, everyone and their mom starts to pay attention. I remember even when when FTX happened, that was like I was talking to my parents, and they actually brought FTX
Yeah,
up.
that's the one thing that happened
Yeah,
where people don't know anything about
bro.
crypto. They were asking me, Josh's parents asking me, like,
Yeah.
man, what's up with this whole TFX? That's what they called it.
And yeah, man, no, I think people are like when you're confused, we talked about the amygdala hijacking. And so it comes with the three options: fight, flee, or freeze. And I think people, when it comes to investing, if they're not in already, they just freeze, right? And so, I think if I don't pay attention, if I go off of what people say, which most people do, and I see this guy saying this, and then I turn around and I see this guy saying the opposite, and then I look left and this guy is saying like something right in the middle of all these guys. So I'm like, man, wait a minute. So what's gonna happen? So if I invest, people ask black and white questions like this, and you guys know what I'm talking about. If I invest, will I lose my money? While the normal answer is probably. Right now, the answer from most people will probably be, I don't know. You could make money, you could lose money, and that's at any time. But right now, that uncertainty is just exacerbated a bit, and it's just causing people to freeze. On top of people historically getting hurt in crypto, and if there's an uncertain time, I'm probably going to take that example of individuals being hurt in the past and put more weight on it, essentially, in my mind. And so, yeah, it's definitely a chance that I would get hurt. So, you know what? I'll just hold off on investing on anything. Now, if you're talking about like people who follow influencers, for example, because you got like a lot of stock and crypto guys out there that a lot of people follow, and they make their decisions based on what they're saying. If I'm watching those guys, they're probably telling me something like, it's a good time to buy if you're going to hold long term, blah, 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 blah. But once again, as a retail investor, I start to think, so if I buy right now, let's say if I buy 10,000, I only got 15,000. So if I buy $10,000 worth of crypto, I might need that in the next few months. And so, you know what? I'll just hold on to it. I'll just hold on to it. And so I think a lot has to do, it's just people are confused as shit right now. Everybody's been calling for a recession for like 2 years straight. And we just haven't gotten it. People are still calling for a recession right now. And I think we are going to get a recession sometime next year. But I also believe that we've already had a rolling recession in various sectors, and things are starting to rebound. So you can make a case for that. And you can make a case for a recession coming down the line. And so, yeah, it's just a lot of confusion, man. I just try to think, if I only follow people, I'm fucked. I don't know what to do. And so I would rather just work my job and make money from my job, if I'm a retail investor like that, which I am, but you get what I'm saying, Jesus.
Yeah.
So
That's
so
a
it's
good point
interesting.
about that's a good point about recessions happening in different areas and kind of rebounding. It's kind of like things are like just going like this instead of
If you look at this chart right here, essentially, so the lighter blue line is January 2023. The darker blue line is February 2023. So they're just a month apart. And obviously, bars to the left indicate recessions or recessionary activity within that industry or sector. And in this case, the only three as of February that weren't showing signs of recession were consumer services, industrials, and technology, which actually, when you look back, it plays out that way. And so every other sector has experienced some type of recessionary activity at some point in time. And so this chart kind of depicts what a rolling recession would look like. You got some that are doing, pretty good in terms of sector-wide performance. And then you have others that aren't doing so well. Financials will probably be the most blaring example in real life and on this chart, for example.
I mean, this like tracks like obviously different industries will be hit first. I don't know. It's interesting that technology isn't being hit so hard. I guess I've been
Yeah.
hearing a lot of layoffs there, so I was expecting that to be way worse.
Yeah, and it's also interesting with tech because yields are high and tech is still
Yeah,
high as well. And so like tech is just which is why you got a lot of people talking about a potential recession in earnings as well, like an earnings recession for a lot of these tech companies. But I mean, it's just been performing, I guess, as a darling. I think, people still look at tech as a safe haven because it's so much growth. And then you got to realize like 90% of funds They own magnificent, the Mag 7. Jesus Christ, couldn't get that out.
The
Uh,
magnificence.
they own the Mag 7, all of them. And
You want to talk
so,
about what the Mag 7 is?
yeah, the seven biggest technology stocks. So, you know how we used to have like the FANG stocks,
Well, they changed it to
Facebook,
Mag
Amazon.
7. They took away the
Yeah,
thing. That's not a thing
magnificent.
anymore?
Yeah, because now you just got like two more. So you got Facebook or Meta, Amazon, Apple, Netflix,
Google.
Google.
Is Tesla up there?
I think Tesla is up there, but I'm not quite sure. I believe Tesla's in there. And I'm forgetting the last one there. But yeah, so like those are the seven stocks that like provided, I think, like
Pretty much
seventy
holding up
percent
the
of the
economy.
yeah, like 70% of the returns in the S&P were from those seven stocks. And so, you know, you get a lot of funds just holding them, and they're probably not just going to sell them, you know. So that's also a factor that kind of provides like that buffer to the downside for tech stocks. So yeah, pretty interesting, pretty interesting. Like healthcare, there's another one. So like we've been seeing a lot of news about Ozempic. Have you guys seen that?
Mm-mm.
They were like a weight loss drug, and now they're like, or no, they are a weight loss drug now.
They
So
are
now
weight
you just
loss.
yeah. So now you can just take drugs and lose weight. So you know, I think that's gonna push healthcare to the upside as well, or continue pushing it to the upside. On top of, I just think we're at a point right now where, like, when you think about crypto and you think about things that are going on behind the scenes, providing value to the overall ecosystem, that's kind of the same thing that's happening in the medical space right now. A lot of investments, a lot of new technologies are being tested. And in the next few years, we're going to start to see the rollout of that. And so, you know,
Yeah.
healthcare going forward, you know, I'll probably be bullish on healthcare going forward, using this as a starting point.
That was a
Mm.
good comparison, actually. The stuff going on, like in the actual fundamentals of the space, even though the hype hasn't returned yet. I kind of
Yeah.
agree with that. That crypto, with all the shit that it's doing right now, is setting itself up to have really good fundamentals come the next bull market. Obviously, there is, fundamentals is not how most retail investors make decisions, though, and
Yeah,
it's
off
going to take a
narratives, yeah.
lot more. It's going to take a lot of PR. Really, is going to be the
Hmm.
winning angle there. But yeah, it'll be cool if crypto's able to get down a transaction cost to make it actually competitive with like credit card purchases. That would actually make it fundamentally like a useful product. The issue that crypto's had forever is that it's super expensive in order to transact on the blockchain, especially decentralized blockchains where there's this competitive process where different people are competing to validate it, and all these energy costs are then passed on to the transactors. But yeah, if crypto is able to bring down those costs, and it is from what I've seen, I talked to a friend of mine who's a VC in the crypto space, and he's telling me this as well. That would be amazing because then once the bull market happens again, you won't be spending $20 to make one little purchase on Ethereum or whatever. You'll be spending closer to what you do a credit card, and it'll be in the consumer's mind a lot better to use. Right? It'll be a just much more useful product.
Yeah, I think we're very much so still in the dial-up stages of the blockchain. And the more I study the internet and how the growing pains it had to go through to
Bro,
become what?
I'm sorry. I just thought about how gas fees, like how high they can actually get. I just thought about, one time I was investing, bro, probably because I was always just putting chunks of money in, right? So at this point, I was going to buy like $1,500 something. I was on MetaMask. I forgot what I was buying. But for that $1,500, bro, I think I paid like 400 something in gas fees. And, and I paid it, just because it was like, I'm not going to wait like 4 more weeks for the gas fees to come back down. Now I just think like, damn, that's actually crazy as fuck. That's like almost what is that? 20-30% of my investment before I actually buy the asset, it's gone. I'm like, man, that's pretty intense. So yeah, that's going to be a huge catalyst. Because if I only have $1,500 and my gas fee is 400, I'm not gonna buy it. I'm changing my mind instantly.
Yeah, it's
So yeah, that
People
was
can
pretty
say,
crazy.
oh, people can say, oh, it's the bull market, so you make more money, you pay more. But like another issue with Ethereum is that they give you an estimate as to what it can be. Like imagine if you were going to buy a plane ticket and it said your fee could be between 50 to 500 bucks, but you only know after you already swipe your card. That's what Ethereum's like right now.
Yeah,
That's
yeah.
not sustainable at all.
No, I mean these are all very valid points. Yeah, they just need to mop this stuff up. And here's the beauty of the the bear market. I know that the who are the decentral bankless. That's the one.
Oh, okay. Yeah, Bankless is
Yeah,
pretty
those
good.
guys. They would always call the bear market the build market. They're like, no, no, we're not in a bear market. We're in the build market. It's kind of funny and it's kind of corny, but they're ostensibly correct because what the bear market does provide is space to actually build up the fundamentals of the ecosystem instead of just all this money going into like nonsense hype projects. Because what's in the bull market, nobody's thinking. They're running into projects that can shoot up. But when you're in the bear market and everything's so hard to get money for, and it's hard to actually do anything, you literally have to focus on fundamentals. And when you cut all the retail consumers out of the equation, a lot of the hype's gone. So the money is much more focused on projects with people that have the money that actually know what they're doing. So they actually give money to projects with better fundamentals. So I do think in that sense, this is a great opportunity for people that are building projects that actually focus on like quality instead of just making nonsense like NFTs, right?
Yeah, I agree. It's
Not
like
our NFTs, but like most
yeah,
NFTs.
there you go. I
Ours
like
are
to
sick.
yeah, I like to equate it to like a NASCAR race. You know, you have I don't know how often the Indy 500 is, but correct me if I'm wrong. I think it's once a year. And that whole year, that team has their car. I have no idea, guys, but I know it's not super often. All right. That whole time, the team is like in the garage building their car. They're testing it for the big show. And you can equate like that whole year off to like the bear market or the built market, like Isaac said. And they're literally building their products for the big show for people to come out and see it. But the only difference in the analogy would be like you have different people getting into your car and driving it versus just one driver driving it and coming to a pit stop to change things when something happens. If the engine blows in the race, you're fucked. Just like we saw Terra Luna collapse. They didn't build their platform right in the bear market. And another point I wanted to touch on that Isaac said
Celsius is
was
a good example just because they were almost like fucking the Dale, what is it? Dale Ironheart. They were
Dale
almost there.
Earnhardt Jr.
Yeah, they were almost number 8, you feel me? And shit hit the fan.
They
And
used that
they must
nitrous too
have,
fast.
yeah, exactly. They must have fucking, just tweaked I'm not a car guy, so I can't use
Blew a
car
head gasket.
analogies.
No.
Yeah, they screwed the head gasket in wrong or something. And now he's going to prison. But yeah.
Yeah, and another thing I want to touch on that Isaac said that people may be thinking like, so when it comes to VCs, companies are raising at a lower valuation because the hype is gone, right? And people think that oh, VCs aren't investing, things are doom and gloom. But again, going back to the built market, developers, you have to keep in mind, blockchain development is a newer concept, and there isn't as many blockchain software developers as like just traditional software developers. And they're expensive. It's supply and demand. You have this new asset class that institutions are going to get into eventually. So everyone's racing to build the best stuff. But in the bull market, since it's not a lot of developers, you have a lot of people bidding on this small pool of people that can build the software, so the prices are really, really expensive. Now,
To illustrate that one point, sorry to cut you off. It's like, I don't know why, but I periodically look at like salaries for people who code in blockchain. And the lowest right now, it shows you how far we've come, but also how far we have to go. The lowest I've seen is like 75 grand. Like that shows you the demand for people who know how to code on the blockchain. So just to hammer home your point there.
yeah, and it's not the same thing for regular software developers.
Yeah,
I've
no.
seen positions for 20, 30K a year, right?
Yeah.
So once we're in a bear market, and you don't have as many people bidding on these same software developers, the costs go down very cheap. So now you can get access to developers for a much cheaper price and help you, build for the big show. It would be like in NASCAR. You have car mechanics are expensive once NASCAR is popping and the race is going off and you have people flying into India, yada yada yada. But during that off season, they don't have a lot of work. It's easier to negotiate cheaper prices. So that's like people are building right now, not just because it's like, time to build, but also it's cheaper to build right now as well.
I think it's super important right now to focus on building. If we have like more weakness in the consumer, which at some point, that is the Fed's goal. He's been saying it still at every meeting ever this year, and or last year. The one of the goals is to soften the labor market. And so if we see softening in the consumer, which guys, if you haven't heard, by the way, the UAW, they effectively walked out of Kentucky's plant. It was a Ford plant. It's like responsible for like 20% of their production, and they just walked out. And so Ford, they're going through some things right now as well. And that's probably a large illustration of what's going on in totality. So if we start to see weakness in the consumer even more, you're talking about more downside to crypto. We always talk about liquidity. That is the thing that matters for crypto. If people have extra liquidity, even in times of uncertainty, they'll still do it. People are like, no offense to people listening, but people are dumb. They're like, oh, I got an extra 5,000. Let me buy some Bitcoin with it. It's gonna be the new money. So they'll they'll do it. So I think right now it's like more important than ever, because if we do, like I said, start to see weakness in the consumer, it's just more downside, which means you're going to have less opportunity for gains, which means you're either going to be bored, you're going to be stuck, or you're already going to be building, looking to come out on the other end with sticky consumer demand for your product because you've built something that actually has a need or such a useful utility where it's like, damn, I gotta use the shit. I was just kind of talking about the consumer and labor market. So Rite Aid actually just filed for bankruptcy too.
No way, really?
Yeah,
Rite
it's
Aid?
funny because you brought up Rite Aid purchases on like 2 Macro Mondays ago. He's like, oh, they're monitoring our Rite Aid purchases. And then like, yeah, they just go out of.
Oh yeah, I
they
remember
go
that.
bankrupt. But we'll see what happens with Rite Aid, just because I think it's more so a pivot than they're like in dire trouble. Because Rite Aid, they've been becoming more of like that neighborhood pharmacy, more and more and more and more and more, especially relative to like a CVS. And so yeah, I don't think that bankruptcy is like a huge deal, but we shall see as we get more information about that. And yeah, last week the CPI came out. So the CPI year over year came out at this was on the 12th. It was 3.7 versus a 3.6 estimate on headline, and core it was actually down. It's down to 4.1 year over year from 4.3%. And so inflation is still stickier than the Fed would like, which means now, granted, we got the Hamas-Palestine conflict on the flip side, but if it wasn't for that, right now, the case would be made for the Fed to hike again at the next meeting. It would, 100%. But now, since you have the Israel-Palestine conflict, and then you have the long end of the curve rising, which is doing some tightening for the Fed, and I'm talking about yields on the long end of the curve, there's a good chance that they will pause. But let's say if they were to hike again, obviously, once again, going back to liquidity, that's less liquidity in the market for risk assets. And we've been talking about crypto this entire episode. And so, I think that's another, I guess, downside catalyst or a headwind for crypto. And just to I like providing these little snapshots. So, Rite Aid files for bankruptcy, lots of focus on the Fed's next decision, in papers, articles, video, everything. Everyone's focusing on what the Fed's going to do, in the business world at least. Treasury issuance is not as hot as our government would like. 18% of treasuries that were issued at the last auction, it was like 18.2% of that was bought by primary dealers. So they were bought by investment banks. And so that shows you weakening demand in the treasury market. which, why yields have been rising so sharply. Even though in the last couple of days we saw yields kind of drop, as of today, they're back to the upside. And I want to say the 30-year was at like 4.8 this morning. And so people are losing confidence in the long term of our economy, and it shows in the long end of the curve. And so bond prices obviously will fall long term, which will continue to push yields up. And that's why, we might see some yield curve control on the long end from the Federal Reserve as well, which means we're tightening even more. And so it's like at this point, damn near everything that I've been looking at points to tighter liquidity conditions, which means that stocks and any other risk asset like crypto, for example, it's just more downside to come. I don't care what happens between now and then, but it will happen. And that's the only thing I'm certain on, not the timing at all. But the only thing I'm certain on is that we have more downside, so we will have more buying opportunity. So yeah, I guess that's where I'll leave that.
Isaac, did you want to anything happen on the old hill? Anything you wanted to discuss before
Well, the
any
hills.
changes you guys are making to your portfolio as well? Like anything else? I can probably wrap up my next point since we're coming up on an hour here.
Yeah, I'll wrap up just by saying, yeah, so the Hill's totally shut down right now.
Really?
We still don't have we don't have a Speaker of the House. There was a surprise, like, abdicate or forced, what is it called?
They booted him.
Basically, if they booted him. A few Republicans got together and booted Kevin McCarthy, who was the Speaker of the House. He's a Republican. And now they are currently in a battle to select a new speaker. And they have a guy, but he's very right wing, and a lot of the more moderate Republicans don't like him. So we're not sure if he's going to make the cut. But
Who? What's his name?
Jim Jordan is his name.
Oh, okay. Two J's is never really a good thing.
Is 2J's a bad sign?
I don't know. I think it is. You don't meet too many good people with two J's.
Well,
I don't know many people at
Michael
all.
Jordan is Michael Jeffrey Jordan. He was the greatest
That
basketball
that
player.
doesn't
I
count.
Michael
know,
Jeffrey Jordan. Is that a middle
but
name though? Because I don't know if
yeah,
that
it is a
counts.
middle name. It
If
is a
his
middle
name
name.
was Jack Jordan, like his first name was Jack,
Oh man,
he
that'd
would
be
be a
so
horrible
weird.
basketball player.
Jack Jordan, that's funny. Damn, that's crazy though, man.
Yeah, that is
Yeah, it
crazy.
happens. It's actually the first time in history that a speaker has been booted like this.
I was
So
gonna say, man, I don't think that does happen
I
that
was gonna
often. That's
say
why I was so
it doesn't
breaking.
happen.
it's funny you say it happens and then follow up with it's the first time in history.
Yeah. It happens, but it's actually never happened before. Yeah,
Oh
fair
my
Damn.
enough.
god, he didn't make a lot of noise anyway. At least I didn't. I don't know. I guess I didn't pay much attention to him.
Yeah, I never
Kevin
heard of him.
McCarthy?
Yeah.
He
I
was
know Paul
very
McCarthy.
muted. Yeah, it's not. It's a very different guy than Paul McCarthy. I've heard.
JT,
But
anything
yeah.
else on your radar? You guys
No,
making
man.
any
So
changes to your portfolio? Isaac, you still sitting in your bonds?
I'm just still sitting pretty. I'm waiting till till everything kind of recession. I'm waiting for recession to be happening and then over, and then I have a few positions I might make then. But until then, if I was in crypto, I actually did want to say this. If I was still in crypto right now, what I would be doing is yield farming. Because I would not be in a strong enough, like, belief in the market that I really would see like major,
Yeah.
like moves. So I would probably be in USDC, and I would be delta neutral yield farming, and just playing off of everybody's, off of all the volatility. And I would do that until a recession has been called, and then I would slowly start to reallocate back into the market. That's what I would do if I was in crypto right now.
Yeah, that's pretty much what I'm doing.
Yeah.
JT,
Yeah.
you
No,
making any
not
changes to
doing
anything?
anything different. If you guys don't know already, I like real estate a lot. So what I've been focused on lately is not buying the asset itself, but trying to help individuals either get funding for that asset or find it for them for, some type of fee. And so that's been a way I've been able to kind of, I guess, stay afloat. Um, and I'm not too focused on Like if I'm gonna buy any, I'm not buying anything new in real estate right now. But if I were right now, it would only be single family rentals. That's it, or industrial commercial space, which is a totally different ballgame. And so I'm not doing too much on that end with stocks. I think going forward, my mind is working more in terms of the yield I get on stocks outside of appreciation. And so dividend paying stocks is one thing that I think I'm going to continually be interested in going forward.
Any
And
specific ones you're looking at?
no,
Particular
no
examples?
specifics right now. And then with crypto, I guess if I was in the space, I would agree with Isaac. I would just be yield farming, like you're doing right now, Vince. And I'm not. I wouldn't be buying with an expectation that I'm going to make a fuck ton of money. The money that I make in crypto, in terms of my expectations, would just be what I'm doing actively only. And if I do get appreciation, that's fantastic. And that's, if you take away half of that, that's basically where I'm at now, with just buying and holding. So I'm not doing too much extra. I do think Chainlink, I always talk about Chainlink, but like that's literally the perfect example of how you create value from yourself that probably would inoculate you from Bitcoin's dominance going forward in the future. And now you'll start to see price separation in projects like Chainlink, in which they are really, really, really putting themselves in a very, very valuable position to where eventually it's not going to matter what happens with the overall space. They're going to do just fucking fine.
Yeah, I agree. So yeah, what I would say is I'm buying altcoins right now, but at a small amount. Also yield farming, obviously, and that's one of the ways like that I'm like when you're investing, it's good to have like a structure because there's multiple ways to buy things and have like asset exposure. So you can do things like yield farming to like almost like DCA by making money off of trading fees, or you can just like DCA on your own. So in addition to yield farming, what I'm doing is I'm DCAing just like regularly from the cash positions in my portfolio, but I have it in like buckets. So like we've been talking about, I do feel like, and I'm gonna pull up a chart here soon. I do feel like we have like another leg down to go, especially with altcoins, but it's not for sure and it depends on which altcoin. Like, and it's not like all of them are going to drop the same amount. So I'm DCA in small amounts, but I have portions reserved so that once things drop like precipitously, I'll be able to DCA with the larger amount. So I want to pull this up here. This is the total crypto market excluding Bitcoin. So this is pretty much a chart for all altcoins. So as you can see here, the price has been in this channel since about August of 22, September 22, depending on when you want to count it, depending on how you count it, bottom to top. From the bottom, pretty much December of last year. And as you can see, it's been trading up in this channel, right? So for me, whenever price is at the bottom of this channel, I've been like buying a little more, and I took a little bit of profits here. And this is when Radix had its big pump as well as Radiant as well. So, you know, and then if you can see right here, I have this like little purple line. This has been like the strongest support zone. And then you can see right here, it says negative 11.11%. So that is from the current price down to like the bottom that it's hit already. So this shows that we at least can probably go down another 11% at least. But I would argue that it can be more because if we go down another 11%, we would be exiting out of this channel. And if we turn it into resistance, that means we can drop even further and probably come down to this. Like the market likes to operate between ceilings and floors, and it likes to go places that it's been previously. So if we go back here to January 2018, this was the top for altcoins. Well, the top was here, but like this was like the safe top, like the ceiling, right? This was like the attic, as I like to call it. So I think we'll probably at least come back down to what's this 228 billion 228 billion dollar market cap, and from the current prices that we're at right now, that would mean altcoins could drop another 30%, basically 29.41%. So just to put a bow on this, I've talked about the altcoins that I'm bullish on: Chainlink, Radix, Optimism, Arbitrum. I feel like Layer twos are going to be a big narrative, as well as real yield protocols are going to be a big narrative in the next crypto market. So what I'm doing is looking at this chart. When we hit the bottom, I'm buying, but also have a fuck ton in reserve so that when and if I'm not going to say when, if we drop below this strong support zone that's been serving as support pretty much since December of last year, I can have some capital to scoop up if we get into this zone here.
Just one thing I would quickly add is that, because you're talking about risk a lot in that breakdown you just gave there. And I start thinking, it's like, damn, well, the easiest money you can make and the safest money you can make, if you got like 200 grand to actually invest, now it really becomes worth it to buy like 1 month T-bills. You're going to make, 10, 11, $12,000 a month just holding that. And, you're not doing shit. So, that's probably, if I had an extra 250 to invest right now, like in one thing, yeah, that's where I will put my money actually.
Yeah, that's a pretty good idea because the yield is actually fan-fucking-tastic.
Yeah, you can make a fucking lot of money in short-term T-bills right now if you have a good base.
Yeah. It's like I like to say, small changes often appear to have no effect until a critical threshold is reached. Like eventually, the fundamentals is going to catch up and like a narrative is going to catch on and then people are going to hop on. So it's like, I have no idea. Like, while I think we can go down here, I don't know for sure. And no one knows for sure. And I know there's going to come a day where I would wish to get these kind of prices in certain altcoins. So that's why I'm buying just in case, but I'm also preparing for things to go lower, but I'm making it so that if things don't, I'm comfortable with the bag that I have for me and my investors so that when things go back up, at least we have a good amount and can make some good money when things turn back green. You guys got any final thoughts before we wrap it up here? Take us out.
I don't know. Maybe this is just me. Unless you already have, millions of dollars and you really know what you're doing, never try to rely on making your money completely from investing into markets. Like, you should have some other skill that you use on a daily basis in order to keep that liquidity up or, just keep a living, like to survive, right? And so never rely 100%. I think a lot of people actually make that mistake where they might do something well and they make a lot of money or a good amount of money, and then they stop doing everything else because, like, oh shit, okay, I'm good at this. No, you just made money. That's all. That doesn't mean
Everyone's
you're
a
good at
genius
it.
in a bear in a bull market, but the reality is you get to put on a
Exactly.
blindfold and throw a needle at the index of cryptos, and no matter what you hit, it's going up.
So build your skills. Like each of us, I think, we do a good job at illustrating skill sets that we've picked up over the years. And now since we're in here talking, it kind of shows in how we come to our ideas based on what we've done in the past. And so, and probably what we do now still, So yeah, it's important to keep adding skill or keep honing the skill that you already have. And then, learn markets. And that skill leaks into markets and it provides you a perspective that probably most people won't have because you're really good at this and you're getting really good at this, So yeah, just throw that in there. And that's it for me, guys.
That's good stuff. Isaac, anything else before I take us out?
I mean, yeah, I concur with JT there. I think that makes sense. I would say adding on to that a bit, don't expect to become a millionaire because you find the crypto coin that's your golden ticket, as people so to say. I think that that happens sometimes with people in this last bull market because there's just so much liquidity just dumping into crypto, and everyone had the exact same idea. So you had all these Ponzi's that got set up, and the last guy holding the bag was screwed. But a lot of people made a lot of money by just investing in some altcoin. It blew up, and then they, there was enough liquidity still in the market for them to pull out and make big. I knew people that did that with DeFi Kingdoms. They made a lot of money on DeFi Kingdoms.
Yeah, I remember those.
Oh,
days.
yeah.
Doom forks.
Yeah.
Ohm forks.
It was fun.
What a time.
Dude, DeFi Kingdoms was fun as fuck. I've played that. It was barely a game, but, it was like a gamified DEX. It was just a gamified DEX, and me and my boss, we did pretty well on it. We gamed the system. We were actually, fun fact, we were the largest single one holder, which was their currency, in the whole world
Oh wow,
by double margins. The second largest holder was half what we had.
Did you
So
guys
we
get
were
in super
really over
early?
indexed.
that's pretty crazy.
Yeah, yeah. He got in super early. Then it blew up. So he got in when it was at like a dollar or something. It blew up to like $30 and he had like he was up millions. But he didn't sell. So he just held it. No, actually I think he bought in at like $7 or something and he held it
Take profits,
and
guys.
Bro, yeah. Oh
it
shit. I'm not
dropped.
gonna lie,
It
bro.
dropped like
If
$3.
any investment
Oh,
at any point in life, bro, if it brings me, bro, I'm cash. I don't give a fuck what you think. I don't give a fuck
Yeah.
what the
man, you
community thinks.
JT,
I'm
that's one
selling
thing
the
you've
shit out of
always
it.
been good at. I'll give you that,
Take
man. I
profit.
remember I remember when things were going crazy back in 2021 and you were buying Chainlink and it was going up and you was like, "Yeah, man, I'm selling something." I just remember thinking, it was one time I looked at my phone like, "Man, is this man crazy as hell?" And then next thing you know, that shit back at 7.
Yeah. Well, I think people say
Yeah, man.
they say
Jesus, I remember those times. That's hilarious.
sell the hype and buy the fear. I think is generally what people say.
And people say
And
it and it's easy to say, but man,
true. Yeah.
when the markets is green, your emotions really take over, and
They
you
do.
really think you in your heart really think things are just gonna keep going up. Like you really think
Yeah,
it.
yeah.
It feels like it, even though we know it's not. It just feels like it.
It's like
Yeah.
you got all these narratives. Everything makes sense because the prices matching the narratives, and you got these new companies offering these different crypto products. I remember Rite Aid and CVS talking about offering Bitcoin ATMs. Like it's just all this stuff. So it's like that's why it's so
Hmm.
important to have a plan in place and stick to it regardless of how you feel. Because man, every time I didn't, it
Yep.
burned me, man.
Yep.
And once you do take profits and things eventually come down because they will every single time, no matter what, every time, you'll be happy. And then you'll get addicted to taking
Yeah.
profits. And that's kind of where I'm at now. Like I've had a few wins in the bear market. And I'm just like, man, I don't care how much I love a project or a protocol, how revolutionary they are, is back to that voting weighing machine thing. It's going to be people taking profits and that's going to drop the price no matter how good something is.
Hmm.
Like there was a time where Amazon, like when the recession hit, the dot-com boom, everything dropped. Jeff Bezos was talking about like, yeah, I see the stock dropping, but I'm just looking at all of our company like metrics and everything's just trending upward. So I'm not really bothered by it. So it's like even Amazon, people were selling Amazon, people were selling Apple. It doesn't matter how good it is, people are gonna sell it, and you should too. So yeah, the last thing I will say is that our course is going to be going on sale next week, and we teach you guys how to do just that: develop a plan, take profits. And then another thing with crypto is like while a cryptocurrency can be have strong fundamentals, the tokenomics may not match up. Like for example, a good example of that is Cosmos. It doesn't matter how good the Cosmos ecosystem does, the value doesn't equate to the token. So you need to be able to decipher between that. So we're going to show you how to yield farm like a professional, how to do technical analysis so you can master your entries and your exits, how to make sure you never get hacked. And then we even got you guys covered on the accounting, and so that once it's time to do your taxes, you're covered there. And we have education around stock market investing, derivatives, as well as just overall portfolio management so you can manage your multi-asset portfolio just like the institutions do. And that's how they win for decades, sometimes centuries. So be on the lookout for that. And that's it. I thank y'all for watching.
Cool. Peace.
Peace out, y'all.